So today I'm going to explain to you what a assumable VA loan is.
Muchas gracias.
What is it? What are the pros? What are the cons? And should you do it? So the first thing is this: what is an assumable VA loan? And it's just like it sounds. You, the borrower, are going to assume the loan of a seller of an existing home that's for sale.
That sounds hard.
A good example would be this. Let's say there's a seller of a home who has 3% interest and their mortgage payments are $1,000 a month to make it easy, simple math. You, the borrower, will assume that loan. You will get the mortgage payments for $1,000 a month and the interest rate at 3%.
I like this idea.
And just to let you know, all VA loans are assumable. And even a non-veteran or a civilian can assume that loan. You will have to go through the process of applying for this loan with that seller's lender. You have to use that seller's lender. You can't use your own lender. And one of the first pros of assuming a VA loan is for you, the borrower. I just said it a few minutes ago. Go back to my example. Let's say your mortgage payments are $1,000 a month at 3% interest. That's what you would assume. That's a lot you could be saving, because right now interest rates at the time of this video on May 1st of 2023, it's about 6.5% to 7%. So definitely get interest rate at 3% would be fantastic. The next pro is this: if the buyer is a veteran and assuming this loan, it will free up time for the seller. That means that seller can go buy their next house and they have full free entitlement. Right now, the entitlement is around $726,000. The next thing I talk about is going to be the cons. Con number 2 is this: the buyer who's assuming the loan must use their house as their primary residence. They can't assume this loan and turn this into a investment or rental property. The next con is this: if a civilian or non-veteran assumes this loan, the seller does not get their entitlement back until the loan is paid off.
What the fuck is that?
And even though every loan is assumable by the government, not every lender has to assume it. They're not going to give any man or woman in the military a loan just because you're a military veteran. So you, as the borrower, must meet or exceed that seller's financial standards when they apply for that loan. So the next con is this: you as the borrower could be on the hook for a large down payment. And this is what I mean by this. Right now, at the time of this video, we are in a seller's market. It's been that way for the past 2 years since COVID. Right now, we have an influx of buyers and not a lot of homes.
Strictly supply and demand.
And their home prices have gone up, appreciated a lot in the past few years. For example, I'm about to list my rental home. I bought it for $105,000 in 2008, and I'm about to sell it now for $185,000. The home I currently live in, I bought it for $172,000 7 years ago. It is now worth approximately $260,000 to $270,000. And I say all that because of this. Let's say there's a seller of a home and he bought it for $300,000, but is now worth $400,000. He's going to sell it for $400,000. You owe the difference of $100,000. The VA will not assume that amount. So unless that seller is willing to lose $100,000, which I don't think they are, that's going to be a lot of money out of your pocket. So that's one of the biggest cons, I would say, with getting an assumable VA loan as a borrower. So in my opinion, it would be better just to get a loan, pay the high interest rates, unfortunately, and then when the rates drop back down, refinance and get lower interest rates, unless you're willing to pay the $100,000 difference. If you enjoyed that video, please check out this video right here where I talk about PCSing to Fort Bragg, North Carolina. If you have any questions about the assumable VA loan or questions on moving to the area, please reach out to me. I'd love to help you. See you guys in the next video.